All right, Ken Range Theory Trader coming at you with another video on how to make $1,000 a week. So I definitely appreciate you tuning in. Definitely don't forget to like, subscribe to the video, leave a comment, and let's just get right into it. No need to waste time. So this is for people trading a small account, and no prop firms will be needed for using this method. So let's get into it. So what this video is going to cover is how much money you're going to need to get started, understanding margin and leverage, some profit targets that you can aim for, and some real chart examples. So the first question on everybody's mind, how much money should I start with? If I want to make $1,000 a week, how much do I need to start with? Now, and disclaimer here, this is a high risk proposition. Okay, so got to get that out the way. So to make $1,000 a week, you need to have a minimum of $250 is what I would recommend. And I'm going to explain why in a second. The second thing you're going to need as well is a high leverage broker. All right. Trading 1 to 50 leverage, 1 to 100 leverage is not going to get it. Okay. You're going to need a high leverage broker. Google them, do your own research. I do not recommend any. I'll tell you who I use, but I have no affiliate links. I just don't do that. You're going to be responsible for your own money and what you choose to do with it. But I would recommend this is that should you become successful using this method, do not leave large sums of money with any broker. You want to get on house money ASAP. So should this work for you, and let's say you make $1,000 in a week, or even if you make $500 a week, whatever, withdraw at a bare minimum your initial in capital, your initial 250. That way you're then trading on the broker's money, and if you lose it, oh well, you didn't really lose anything. You can just start over with a fresh 250, compound, do whatever. And I hope that makes sense. So why 250 though? Why do you want to start with that amount of money? Well, this is what you need, okay, in order to take a position that's going to be worth $5 a pip. And the main thing you really have to understand is that you want to keep your pip value fixed. So we're aiming for $5 a pip. Okay, that should be your weekly goal. $5 a pip, no matter the pair that you trade, and your weekly goal should be getting 200 pips. And let's go back to this chart real quick. So in order to get $5 a pip, if you have a quote currency, the quote currency is just the second currency in a base pair. So for example, if you're trading Aussie Swiss, in order to get $5 a pip, your lot size needs to be 0.45. Okay. If you're trading New Zealand CAD, your lot size needs to be 0.7 and you need to have $140 in your account. Okay, that's your margin required. If you're trading pound Aussie or so, and the pair with Aussie in the second part, okay, 0.75 New Zealand, which is the most expensive, 210. That's why I said 250 to give you a little breathing room. USD need to have 125, JPY 150, pound, which is only one pair, euro pound, 85 bucks. I did include $10 positions where these positions here would be worth $10 a pip, but for now we're only going to focus on $5 per pip. So again, $250 will give you more than enough margin to take one entry and only one entry. I do not teach scaling in. Okay, one entry is enough. And while it is using a good portion of your margin to get started, once you get your first win under your belt, you don't have to keep using most of your margin to get this. All right, so let's keep going here. So again, 200 pips times $5 per pip will get you $1,000, and it is doable in a week. What if I only get 100 pips in a week? What if I only get 50 pips in a week? What if I only get 175 pips in a week? Who cares if you fall short? If you're making more money at the end of the week than you started with, you are beating 99% of other people who are doing the exact same thing you are. Most people do not make money trading. So don't get so fixated on, oh, I got to make $1,000. Get fixated on, okay, I put in 250. I started my account with 250 and I'm ending the week with 700. That's pretty cool. Let me take out a couple hundred, go have some fun. It's not real until that withdrawal hits your bank account, okay? That's when trading becomes real. When you make a withdrawal, when you've watched all these videos, you've studied all this stuff, and you start to actually see the fruit of your efforts, okay? I'm just giving you some general targets that you can shoot for here, okay? But this is always amendable to you and your style. So let's keep going. So there's multiple approaches to this. You can do one swing trade that can yield you 200 pips in a week using a baseline approach. If you do not know what I'm talking about when I say baseline approach, what you're going to need to do is pause this video, and I'm going to link these videos in the description. And you need to watch the indicator video showing what the indicator is that can hyper grow your profits. Okay, and I'll link it in the description because the next chart is going to show that. If you don't know what that is, I'm going to link it, so don't worry. But you need to pause this video, watch that, and then you can watch this one. You can also get 50 pips over 4 days. 50 times 4 is 200. You can do 2 trades for 100 pips a week. It doesn't matter. Just your goal is still going to be 200 pips a week. Can I get 200 pips a week at $5 per pip? Okay, or you can do 3 trades at 70 pips a week. Doesn't matter. Okay, it's just math at the end of the day. All of this is just numbers on a screen. Okay, so I'm going to show a few examples of the first 2 approaches that I put here. So let's say you want to try to get one good swing trade that can possibly give you 200 pips a week. What would that look like? It would look something like this. Okay, this is the baseline method. Again, if you don't know what this is, I'm going to link the video in the description. Okay, so this is CAD yen. I included the dates. If you want to look at it for yourself, you can. So remember our steps. Okay, and if you don't know what the steps are with our candle range theory trading method, you're going to need to pause again. Go to the linked video in the description showing what the candle range theory is. All right. We're looking for first our ATR candle. If you don't know what that is, videos in the description. That blue candle that is above the baseline. That's what we're looking at. Okay, and you see it right here where these 2 horizontal lines are extending from. Okay, so our blue ATR candle hit at 1 a.m. Our money candle, okay, hit at 9 a.m. And then our entry window was anywhere from 1 to 5 p.m., that range of time, okay? And so when we take an entry there, set our stop loss, this trade went for 200 pips from Monday, near the end of the trading day, through Thursday, September 26th. All right, this is what a 200 pip trade will look like. But again, you want to have fixed profit targets because I left the rest of the trade in here so you can see it tanked. After it spiked up and hit the 200, it spiked up and dropped dramatically. So imagine if you didn't have a fixed profit target, you would have lost all of that money, right? That's what we don't do. That's not allowable. Don't let yourself be up 100, 150, 120 pips and then lose it all at the end of the week. We don't do that. Okay? Set your profit targets and be done. You don't really need more than 200 pips a week. You really don't. All right. But this is a swing trade approach. Now, what's the drawback to using this method, though? They're rare. I'm going to be honest, they're rare. If you trade all the pairs, you may catch 1 a week, 1 to 2 a week. But again, you can just set this and forget it. This is ideal for people who may be working full time, don't have a lot of time to trade the chart, check the charts. This is ideal for you. And if you get stopped out, you look for another one. But again, in this way, you're just setting it, you set your take profit, stop loss, and then you're either up 200, you're either up, a grand, or maybe you lost 50, 200, 100 bucks, something like that, depending on what your stop loss is, depending on how the chart's set up. Next, let's see what a week would look like if we did the 50 pip per day or per trade method. I don't like saying per day. I prefer to say per trade because sometimes a trade may take 1 to 2 days to play out all the way. All right, so I used the week of December 2nd just as an example, so you can look at this for yourself. This is pound Swiss. All right, so let's remember as well, I didn't cover that on this one. For this one here, this was CAD yen. So if we go back to our lot size position, remember yen is a secondary currency. So we would have had to put a 0.75 lot size on that. And if we have a $250 account, we're using $150 worth of our margin. All right, that's how that would look. And there's plenty of room. You still got $100 left of margin. That's plenty of breathing room. You shouldn't have to worry about it being blown as long as your stop loss isn't hit. All right. So next up, we have pound Swiss. All right, this is a different approach. Let's say you're only going for 50 pips. Okay, each of these trades are worth $250 each. So all of these charts that you're looking at is 250, 250, 250, 250. All right. So let's see. We have our ATR candle here, the yellow candle. Again, if you don't know what I'm talking about, you need to check the links in the description to see that. Our ATR candle, the yellow candle, which is our signal to go short, occurs at 1 a.m. Our money candle occurs 4 hours later. All of these are 4-hour charts as well. I didn't mention that. This is a 4-hour chart. Okay, our money candle, which pokes above the range and closes back up inside of it, occurs at 1 a.m. Our entry window is at 9 a.m. Okay, 9 a.m. You take that and it tanks. It does have a retrace. We don't let that scare us. Okay, set your stop loss and take profit, and then tanks again. All right. So it took a few hours. It took, what is that? 4, 8, 12, 16, 20. So the next day, this is a 24-hour period here. But again, $250 in a day. I'll take that. Okay, I'll take that. All right. So let's see what the next day looks like. This is, or the next trade rather. This is Tuesday, December 3rd. All right. Our ATR candle, this blue candle right here, which establishes our trading range, occurs at 5 a.m. The money candle pokes below the range and closes back inside it at 9 a.m. So our trading window is in the 1 p.m. and on hour. We would take our entry anywhere in this candle here inside the range, and that was 50 pips. It looks small, but this was actually a 50 pip trade. You could have held it. As you can see, it did keep going up. But if you're only aiming for 50, you don't have to get greedy. All right, keep it simple. This is another, this chart right here is worth $250. All right, $250. So you're up 500 bucks. Okay, if you want to stop right there, you can. If you're not making 500 bucks in 2 days at your job, if you want to stop here, you can. This is your business. You run it as you see fit. You want to go for a grand? Let's take a look at a couple more. Next one is dollar CAD. This is on December the 6th. All right, so our blue ATR candle occurs right here at 5 a.m. The money candle dips below it, closes back inside the range, and then our entry is in the 1 p.m. window. Now, some of you may be wondering, hold on. The candle is tanking right here and it's going back below the range. I thought that's a bad sign. Can be, but here's the thing. See the money candle right here? The candle after the blue ATR, the candle after the blue ATR candle. As long as that low holds, trade is good. Okay? Even if it toys with the range a little bit, consolidates, don't let this freak you out. This consolidation is actually a good thing because as long as it's low holds, sometimes these trades take time. We want it to go into instant profit, but it's not always the case. But as you can see, this went for way more than 50 pips. So this might have been a 100 pip trade. All right. But in the meantime, you can't let this type of price action, if it retraces, don't let it shake you out of your trade. If you know what you saw, if the range is holding up, then stick with it. And a good rule of thumb is this. If the candle range, okay, the low of the ATR candle is not broken by anywhere from, I'd say, between 15 to 20 pips or so, trade's still good. Or if the low of the money candle holds, trade's still good. All right, trade is still good. So this right here was another $250. So now we're up 750. So now we just need one more trade. And here it is on December 6th as well. Money candle, the blue candle right here, that's our signal to go look for a long, okay? Occurs at 5 a.m. We wait for the money candle, which is at 9 a.m. Dips below the range, comes back into it. And then our entry window is anywhere from 1 p.m. onward. This one would have been a weekend hold. And I'm going to be honest, this stop loss, it would have been pretty sizable. Okay. But at the end of the week, you should have built up enough margin whereby it's really okay to deal with some drawdown as long as your take profit does get hit. This trade really took off on Monday. So it took it on, you would have taken it on a Friday, but payday wouldn't have been until Monday. This would have been a weekend hold. But same thing, the low of the money candle did hold, didn't spike down or anything like that, and it went up through the next week. It went up sizably, and that's it. These four panes right here, 1, 2, 3, 4, over the week of December 2nd, so you can look at them for yourself. I just showed you $1,000, starting with 250. All right, so your ending account balance for the week would have been $1,250. Take out some. I would say take out enough to start maybe with a $500 account, and then just rinse and repeat. You can just keep these numbers, just stick with the $5. You don't have to get greedy and start trying to increase your lot size. A lot of people they think they figured the market out and they want to increase things. No, if you have a $500 account and can still make a grand off of that, you understand that you're in like the top 1%. If you can do that consistently, you're in like the top 1% of traders, period. Now, how realistic is that? It's only up for you to sign. It's only up for you to really find out. And again, it is high risk, but it is doable. And again, once you get on house money, if you do lose an account, God forbid you get greedy, you do something dumb, you don't follow the plan, at least you haven't lost anything because you got your initial investment back. So in conclusion, 1 to 500, you got to have that. Anything less won't do. If you have 1 to 50 leverage, if your broker only offers 1 to 200 or 1 to 50, it's not going to work. You got to have more money. It is what it is. All right. This is a high risk plan / proposal. Don't trade what you can't afford to lose. You don't take your rent money, your mortgage money, your car note, whatever, your kid's daycare bill and put it in the market. Please don't do that. Please don't be a gambler. All right. I don't teach gambling. The risk is high. The reward, though, can be great. But if you have to save some money, if you have to demo it, open up a demo account and try it first. If you want to do that, prove it to yourself. Okay. Demo is always an option before you trade live funds. See how realistic it is. But stick to the lot sizes. That's the main thing I'm going to harp on. Okay. So getting a good start is key. Once you get your first win, you doubled your account. You went from 250 to 500, okay, in a day. After that, you should be able to take a loss or two. Now, I showed you a perfect week, but or can you lose? Yes. But if you make 250, you shouldn't lose 250 the very next day. All right. I'm not teaching that. Keep your losses small, keep your wins big, and you can trade forever. All right. So remember that 200 pips a week is going to be the rarest. The swing trade model that I showed you, this one right here, it's going to be the rarest. It just doesn't happen often. You got to catch a trending market. Sometimes they trend, sometimes markets just chop around. They don't do much of anything. So it can be a good approach using the baseline method. Again, the link is in the description, but it occurs the rarest. The most common trades you'll see are things like this, 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 and that. 50 pips in a day or two, no big deal. Okay, you'll see those more often. The drawback to that, though, you open yourself up to more losses. All right, because you're looking for something pretty much every day versus looking for one trade a week that could just pay you the 200 pips slash $1,000 and being done. All right, so pick your poison. It's your business. You run it as you see fit. What do? I do the 50 pip model. That's what I prefer. All right. And the last thing I'll say is to withdraw, withdraw, withdraw. Compound later. Get on house money first. And then if you want to try that whole, oh, I took $500 up to 10,000. That's fine. That's fine. Get on house money first. Okay. Because nothing is worse than taking a small account to a big amount and you lose it all and you got nothing to show for it. That's what I don't want. Okay. And I've done that. Okay. And I've done that. But I have to learn, okay, until I get that withdrawal, it's not real. It's funny money. Till it hits my bank account, it's not even worth hardly even talking about. Who cares if you can take $500,000? Who cares if you can take $100, turn it into 10 grand, and then lose it all? How much money did you make? Zero. No, I'd rather have someone that can take 250 up to a grand, take out 500, and then do it again. That's what I would prefer because a lot of people they watch these videos and they take all these trades and they have zero to show for it because they think they can always get more, get more, get more. Folks, we are trading to make money, period. And if you're not making withdrawals, something's off, right? So it's time to do something different. And that's what I want for you. So don't forget to like and subscribe. I appreciate your time and attention. Also, you can follow me on Twitter/X at the Candle Range Trader. Candle Range Trader right there. I put the screenshot there so you can. I post my trades there, live trades that I do take with my analysis. So you can definitely follow me there and check that out. Don't forget to like. Don't forget to subscribe. Again, I appreciate you guys, all your time and attention. Leave a comment. I'll do my best to get to you. And I hope you have a great rest of your day. Thank you for your time and attention.